Stock market dividends. Earning regular income from dividend-paying stocks. Welcome to Income Ideas Insider, where we explore the secrets of stock market dividends. Earning regular income from dividend-paying stocks. Stock market dividends offer investors a way to earn regular income from their investments. Dividend-paying stocks are issued by companies that distribute a portion of their profits to shareholders, providing a steady income stream. Here are 10 key points to consider if you're interested in earning regular income from dividend-paying stocks. Before we start our video, please remember to like, subscribe, and hit the notification bell. Your support is invaluable to us. Number 10. Choose dividend-paying stocks. When investing in dividend-paying stocks, it's crucial to select companies with a history of paying consistent dividends. Look for companies with strong financials and a stable dividend payout ratio. A stable or increasing dividend payout over several years indicates financial health and management's confidence in the company's future performance. Analyze the company's financial statements, including its income statement, balance sheet, and cash flow statement, to assess its ability to sustain dividend payments. Additionally, consider factors such as the company's dividend growth rate, industry trends, and economic conditions to make informed decisions about investing in dividend-paying stocks for long-term wealth accumulation. Number 9. Dividend yield. When evaluating dividend-paying stocks, consider the dividend yield, which is the annual dividend payment divided by the stock price. The dividend yield indicates the percentage return on your investment based on the dividend income received. A higher dividend yield may suggest a potentially higher return on investment, but it's important to consider other factors such as the company's financial health, dividend sustainability, and growth prospects. A very high dividend yield could also indicate that the stock price has fallen significantly, which may be a red flag. Number 8. Dividend growth. When selecting dividend-paying stocks, look for companies with a track record of increasing their dividends over time. This trend indicates a healthy and growing company with strong financial performance. Companies that consistently raise their dividends demonstrate financial stability, profitability, and management's confidence in future earnings. Such companies are often well-established and have a competitive advantage in their industry. By investing in companies with a history of dividend growth, you not only benefit from the increasing income, but also position yourself to potentially benefit from capital appreciation as the company continues to grow. Number 7. Dividend reinvestment plans. Consider enrolling in a dividend reinvestment plan when investing in dividend-paying stocks. DRIPs allow you to automatically reinvest your dividends to purchase additional shares of the same stock, often at a discounted price. This process of compounding your returns over time can significantly increase your investment value, especially in the long term. DRIPs are a convenient way to reinvest your dividends without incurring additional brokerage fees. Number 6. Diversification. Diversifying your portfolio by investing in dividend-paying stocks across different sectors and industries is a key strategy to reduce risk. By spreading your investments across various sectors, you can mitigate the impact of sector-specific risks and market volatility. For example, if one sector experiences a downturn, stocks from other sectors may still perform well, balancing out your overall portfolio performance. Additionally, investing in different industries can provide exposure to a wide range of economic conditions and trends, further reducing the risk of concentrated exposure to any single sector or industry. Diversification is a fundamental principle of investing and can help you achieve more stable returns over time. Number 5. Dividend taxation. Understanding how dividends are taxed in your country is important when investing in dividend-paying stocks. Some countries offer preferential tax treatment for dividends, which can affect your after-tax returns. However, tax laws regarding dividends can vary widely from country to country, so it's essential to consult with a tax advisor or accountant to understand the tax implications of investing in dividend-paying stocks in your specific jurisdiction. By understanding the tax treatment of dividends, you can make more informed investment decisions. Number 4. Dividend payment frequency. When investing in dividend-paying stocks, consider the frequency of dividend payments as it can impact your income needs and investment goals. Some stocks pay dividends quarterly, which can provide a regular income stream for investors who rely on dividend income to meet their financial needs. Other stocks pay dividends semi-annually or annually, which may be more suitable for investors who are looking to reinvest their dividends to enhance long-term growth. Your choice of stocks with different payment frequencies should align with your income needs and investment objectives. For example, if you need a steady income stream, you may prefer stocks that pay dividends quarterly. If you are focused on long-term growth and can reinvest your dividends, you may opt for stocks with less frequent dividend payments. Number 3. Dividend sustainability. When assessing a company's ability to sustain dividend payments, consider key financial metrics such as earnings growth, cash flow, and payout ratio. Earnings growth indicates the company's profitability and ability to generate sufficient funds for dividends. Positive and stable cash flow ensures the company has enough liquidity to cover dividend payments. The payout ratio, which compares dividends to earnings, should be sustainable to avoid straining the company's finances. A healthy balance of these factors indicates the company's ability to maintain dividend payments, providing investors with a reliable income stream. Number 2. Monitor your investments. Regularly reviewing your dividend-paying stocks is crucial to ensure they continue to meet your investment criteria and adjust your portfolio as needed. Monitor key factors such as the company's financial health, dividend history, and industry trends. If a stock no longer meets your criteria, or if there are changes in the market or economic conditions, consider adjusting your portfolio. This may involve selling underperforming stocks, reallocating funds to better opportunities, or rebalancing your portfolio to maintain diversification. By staying proactive and regularly reviewing your investments, you can make informed decisions to optimize your dividend income and overall portfolio performance. Number 1. Seek professional advice. Consider consulting with a financial advisor or investment professional when selecting dividend-paying stocks. They can help you assess your financial goals, risk tolerance, and investment horizon to recommend stocks that align with your objectives. An advisor can also provide insights into market trends, economic conditions, and industry analysis to make informed investment decisions. Additionally, they can help you create a diversified portfolio that balances income generation with capital appreciation. By working with a professional, you can gain valuable expertise and guidance to build a portfolio of dividend-paying stocks that meet your financial needs and goals. Investing in dividend-paying stocks can be a reliable way to earn regular income from your investments. By selecting high-quality dividend stocks, diversifying your portfolio, and staying informed about market trends, you can build a portfolio that generates steady income over time. Don't forget to like and subscribe for more tips on stock market dividends, earning regular income from dividend-paying stocks.